All of us have definitely heard of the news about GameStop stock recently. Yet, behind the massive gains of GameStop, there were and are going to continue to be many consequences as a result of this event. The retail investing revolution is going to set the stage for some massive changes to the entire stock market and the precedents for the future. In this video, I will be covering the truth behind the GameStop saga, including stock market manipulation, apex predators, and false stories. This will go down in history as one of the most influential stock market revolutions in our decade. Welcome to Kaz Gains Academy. If you're new to the channel, please consider subscribing for more content like this, and let's get right into it. Before we get into the manipulation that has been going on, we must understand how we got here in the first place. Though many believe GameStop is only a meme, there was actually a strong case for GameStop as a value play before all the momentum. For a long time, GameStop, though the world's largest video game retailer, was a company that was seen by many as a struggling business model because their main focus was in physical video game retail stores selling consumer electronics. In 2019, however, GameStop replaced their CEO with George Sherman, who looked to transform and revive GameStop so they wouldn't be the next Blockbuster. He introduced what he called the GameStop Reboot Plan, which includes restructuring the operations of the business, optimizing its used video game sale, and developing new revenue streams. Despite this effort, the stock price did not move much, especially compared to today's price. Enter in Reddit forum Wall Street Bets, which is founded on the notion of retail investors going all in on high-risk, high-reward positions. The forum noticed that GameStop was actually a decent value play because of the situation it was in. The main points were that they actually had a strong balance sheet and could potentially offer a share buyback program. And there were also going to be new consoles releasing soon in the PS5 and the Xbox Series S and X, which in the past caused massive gains in the stock. GameStop's loyalty program still had 55 million members, and the stock was shorted 120%, which could cause a massive short squeeze. Michael Burry, who famously shorted the housing market in the 2008 recession, also invested in the company after he noticed that they actually had some fundamental value left. After that, we all know what has happened since then. Short sellers flooded in, and GameStop had a short squeeze unlike any other we have seen. Not surprisingly, the hedge funds that were shorting GameStop were on the verge of having to cover and go bankrupt. At this time, brokerages such as Robinhood suddenly restricted investors from purchasing GameStop stock. This bought the GameStop shorters some time to recover. Now we are here today. Yet, this isn't the whole story. Behind the scenes, there are a lot more questions that need to be addressed, especially in Wall Street. These changes will definitely change the stock market as we know it. Over the past week, the GameStop debacle for the predatory hedge funds has really exposed their true colors. These predatory hedge funds such as Citron and Melvin Capital have made exorbitant amounts of money by driving businesses into the ground. Even though the idea of shorting a stock is valuable, with the manner of exposing fraudulent companies like Enron and Theranos, the investing landscape over the past few decades has set it up for large hedge funds to have the ability to attack companies like GameStop. The hedge funds are not betting on companies that are bound to fail. They're betting against companies and making the failure happen with their power. For example, while Tesla stock was rallying, one Tesla short seller compiled a report containing claims of quote-unquote unintended acceleration. The short seller Brian Sparks claimed that when some users were stepping on the brake, the vehicle would accelerate, leading to a car crash. Later on, when Tesla checked the data, the company found that this claim was false, and the users in this report were slamming on the accelerator. That right there is an example of the type of manipulation going on in the market. Stories are being fabricated by hedge fund managers in order to slam down stocks, and this has been going on for many years. The abilities of these large hedge funds has largely devalued the core meaning of investing. Whether or not GameStop was going to transition their business and eventually become successful is besides the point. Investing is supposed to be used as a way for investors to fund capital towards investments that they believe will be profitable, and in turn, drive innovation and push society forward. David Sachs, who is a partner along Peter Thiel, the CEO of a famous venture firm named Founders Fund, described this manipulative nature perfectly.
They are in the business of shorting companies to destroy them. I mean, that is their business model. And they are not academic traders, okay, who are just speculating on outcome. They engineer the outcome, right? Look at their tactics. Just watch the show Billions, right? They hire PR people. They hire private investigators. They're participating on these message boards, spreading disinformation. Look at the year of hell that Elon went through, right? They tried to destroy
It's like 5
Tesla.
years.
Yeah, exactly. They try to destroy companies to engineer that outcome. They create nothing. They are in the business of destruction.
Behind the scenes of the stock market, stocks have been manipulated by hedge fund managers through quote-unquote idea dinners. At these dinners, stocks are chosen to be manipulated by hedge fund managers. Now that the tables have turned, all of the losing hedge funds have to attack the retail investors with two strategies. 1. The short ladder attack, and 2. Fomenting impressions through tactics like manipulating the media, allegedly. First off, a short ladder attack is when hedge funds create a false impression that a stock is going down. How they do this is the short and manipulative process of the short ladder attack. For example, let's say there are two hedge funds, hedge fund A and hedge fund B. Hedge fund B will sell their GameStop stock to A at a price that is lower than the market price. Next, hedge fund A will sell their stock back to B at an even lower price. Then, B will sell to A at a lower price. After that, A will sell to B again at a price lower than the previous sale. This process will keep occurring, and each time, the last price GameStop was traded at will show up on their screens, making it seem like GameStop is going down when it actually isn't. Another attack strategy is fomenting, which is when hedge fund managers make it seem like some devastating news happened to a company when nothing actually happened. Have you ever wondered why a stock was up or down a lot in one day when nothing happened? A lot of the time, these price movements are from hedge funds that are fomenting. First, they will sell a significant amount of shares of a stock, which drives the price down. Then, people will be wondering why that stock is down so much. So, the hedge fund managers will call up someone who works in the mainstream media and tell them about a fake story going on with the stock. Ultimately, this will drive the price down. Jim Cramer described this process with RIM, or Research in Motion, which is a company that owned BlackBerry.
This is actually just blatantly illegal, but when you have 6 days and your company may be in doubt because you're down, I think it's really important to foment, if I were one of these guys, foment an impression that Research in Motion isn't any good, because Research in Motion is the key today. So, you would hit this guy and that guy, and when you would see an offering, when you see a guy who's bidding, you'd wipe out that guy very quickly. And what I used to do was called, if I wanted to go higher, I would take and bid. And if I wanted to go lower, I'd hit an offer. And I could get a stock like RIM for maybe, that might cost me 15, 20 million, Annie, to knock RIM down. But it would be fabulous because it would beleaguer all the moron longs who are also keying on Research in Motion. So we're seeing today with RIM, we're seeing that. That's, again, when your company's in a survival mode, it's really important to defeat Research in Motion and get the Pisanis of the world and the people talking about it as if there's something wrong with RIM. Then you would call the Journal and you get the bozo reporter on Research in Motion, and you would feed that there's a Palm's got a killer it's going to give away. These are all the things you must do on a day like today, and if you're not doing it, maybe you shouldn't be in the game. Okay.
When it comes to GameStop, it's no coincidence that the mainstream media has been covering it with biases. It's no surprise that CNBC's Jim Cramer keeps talking down on GameStop. In my opinion, allegedly, Jim Cramer may be paid by hedge fund managers to be bearish and give false stories about GameStop. He's been telling everyone to sell GameStop stock in a rather suspicious manner.
Take the home run. Don't go for the grand slam. Take the home run. You've already won. You've won the game.
Yeah.
You're done.
If you enjoyed this video, please hit the like button and subscribe. And I'll see you in the next one.